Welcome to another episode of The Brand Called You, a podcast and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from thousands of successful individuals from around the world. I'm your host, Ashutosh Garg, and today I'm delighted to welcome a senior and accomplished professional from New Delhi, India, Mr. Tushar Kansal. Tushar, welcome to the show.
Thank you. Thank you so much for having me.
Tushar is the founder and chief executive officer of Kansaltancy Ventures. He is a venture advisor with many VC funds and contributes to a portfolio of over 400 companies, more than 60 countries. So, Tushar, tell me a little bit about your own journey and what drew you to the world of startups and venture capital.
I had been part of very marquee companies like Deloitte and also Times of India's venture arm called Brand Capital. And I was later raising billions of funding for MTS and Aircel before settling down as chief financial officer of a company owned by the American private equity fund Guggenheim Partners. So I was always in the entrepreneurial space, having met so many founders, and I saw that how businesses evolve when bold ideas meet structured capital. And what truly drew me towards venture capital was India itself, because we are living in once in a century moment with for 29 years of average age, 65% of the population below 35, smartphone penetration, Wi-Fi, and now even the Starlink is coming, so all the internet is coming, and that gives you access in small towns. So we see so many aspiring founders coming from tier 2 and tier 3 with a hunger of building something on their own. So I saw founders solving local problems using technology and being very aware about how the latest platforms can be used to scale massively at a lightning speed. So venture capital for me became a way of combining finance with purpose
Very
to
interesting.
empower founders.
Very interesting. And can you share a moment in your career that shaped your approach to mentoring founders?
Yeah, I was working on large scale fundraisers, and I met all kinds of leaders. Some had impeccable credentials, but very rigid mindsets, having worked in silos across large companies, and others had humility and they had learning agility as well. So I observed that the latter always survived longer. So there was a startup which was in renewable energy, and they hadn't figured out the business plan properly, but the founder was very, he had great hunger for learning. He gave a lot of respect to people who had achieved something, and hence he always got the right inputs and guidance. And slowly he climbed his way up to learning the entire sector, and that taught me something really powerful, that it's not intelligence that wins in startups. It is resilience and the ability to pivot.
Very
So my
interesting.
mentoring style nowadays is more about asking the right questions rather than just telling them what they can do.
Very interesting. And tell me, when you do work with investors and entrepreneurs, what are some of the personal values that guide you?
Well, it is very strange when a person starts rising in his career, he gets a very strong notion in India specifically. I don't know whether it is a regional phenomena that you'll have to do something wrong to make huge amount of money. But the fact is, if you talk to those people who are sitting on the top, they will tell you that your true currency is trust. And I've always believed that integrity is a non-negotiable trait. And one wrong association or one unethical act can undo years of credibility. So I feel that money follows trust, not the other way around. And the other traits which are important is empathy. Sometimes you are sitting on a designation and you feel really powerful about it. but you forget that you are part of an ecosystem. So
Right.
empathy also works both ways. If you give, then you receive. And long-term thinking, and also inclusivity. People who are less talented than you, people who have less, they have had less support than you in the life. They need you to be inclusive and adapt them and empower them so that they can learn and grow up. So that these traits are, I feel, very
Great
important.
response. Great response. Thank you. You're known to be sector agnostic, Tushar. What principles help you to navigate such incredible diversity that you have?
Well, consultancy ventures has always been sector agnostic, and the reason is simple that we feel that innovation doesn't fit in neat boxes. Good ideas can come from anywhere: fintech, agri-tech, deep tech, or even creative industries. But sectors might differ, but fundamentals of a good business remain the same. So the first principle we follow is a clarity of problem solving. How attached is the founder to the problem he's solving? Is he only after seeing the unicorn founder's money, or is he really passionate about the problem? Then scalability, of course, and resilience, because it might take you 3 years, 5 years, 7 years, even 10, 15 years. I saw this company getting listed, Lenskart, and the first check they had received was from the Chirate Ventures in 2011. So I was thinking 14 years. And so, resilience is very important.
Correct.
Team chemistry can't be understated. And so, the diversity of India makes me sector agnostic.
And what do you look for when you are evaluating an investment in a startup?
Well, again, going back to problem solving, that, what is the clarity of purpose? So, I see some people, they are actually talking about sustainability. They are not practicing it in their company. So you have to lead by example. You have to have clarity of purpose, which is the most important. The founder market fit is very important. A founder who will make mistakes and then grow will probably take 2 years more. And he also burn a lot of money in the process. So founder market fit is really important. People who get the work done is required. Execution is, of course, as we can see how big companies like L&T and Reliance have grown with the talent of execution.
Correct.
And what the founder has to be very, very sensitized about unit economics. Gone are the days when you can keep burning money and feel that someday you can monetize. And last is, of course, being ethical and the chemistry of the team, because founders who don't share chemistry, they end up breaking companies. So broadly, these traits.
Well said. You've contributed to a portfolio of over 40 companies where you've supported investment. What, in your view, are some of the common mistakes a lot of founders make when they're seeking investors or advisors?
Founders, they somehow feel that they are pitching to a bank. They're pitching for funding. But the investor is coming in your company and might stay for God knows how many years, like 5 years, 3 years, 8 years. In the case of Chirate, it was 14 years. So it is a partnership. So you are talking to somebody who you want, that this guy becomes your partner for the next long years.
Correct.
So instead of trying to sell, you have to treat it like a partnership, like building long-term allies. And those are the common mistakes. Then many founders, they chase valuation and over validation. So you have to remember that the other person, you have to leave something on the table for the other person also, for them to feel that the risk was justified. And most founders, they don't research the investor. All the thesis of VC funds and family offices are available on the internet.
Yeah.
You can just simply go through it. You will realize that what they have committed to their LPs is what they have to deliver. And in very rare cases, they go off the mark.
Very interesting.
So this is important, and founders also hide problems that transparency will scare investors, but it is not. It is not like that, because the investors have a huge experience dealing with many companies, and they know that problems exist in all startups. By nature, the startups are very fluid. They are like a fish market inside, and they are only trying to solve problems one at a time. So and last is lack of preparedness.
Correct.
If you are not going prepared, you're not honoring the investor, and so you should know everything the investor can ask, and that's very important.
Well
So
said. Yeah.
these are the common mistakes, I feel.
Well said. Well said. Tell me, every time you bring in investors into an organization, given that there's such diverse investment philosophies, how do you bring together investors with not only different philosophies, but with very different risk appetites and very different goals?
Well, it is not easy. I remember I was in Aircel Treasury, and my head of Treasury, Mr. Pava, used to think that we can raise 20,000 crore of debt from 12 different banks, and all the sanction letters have to be the same. So I kept on telling him, sir, it is not possible. You are trying to align a European thinking with a public sector bank in India thinking.
Right.
So, investors are also like that. Some want short-term exits, some want steady growth, some want impact-driven outcomes.
Yeah.
So, narrative alignment is very important. Like, this is what we are trying to achieve in this round. And, this will get you to this place, given this kind of a risk. And so narrative alignment is very important.
Right.
And if you are transparent, all the investors are saying the same thing, that, yeah, this guy is actually saying this. And you are not trying to play a different game with everybody. That is most important. And you have to distribute the risk across sectors, across stages. So, diversification is very important. So you might want to have a strong VC, given the fact that in the next round also he takes a lead. So it will help you. So you might want to tell him that, buddy, just put in $1 million right now, and in the next one I'll ensure that you get a 3 to 5 million kind of a portion. So these things are important. And lastly is education. Many first-time investors, they also need to be educated on how VC cycles work.
Right.
So it has to be sometimes actually educating the investors also.
Well said. But Tushar, also tell me, what qualities do you believe separate resilient founders from the rest?
Well, I keep on seeing the videos of Jensen Huang nowadays, and he says that intelligence is overrated. And what is most important is how much pain you can endure.
Correct.
Because being a founder of a startup is not entertainment every day. It is prolonged phases of downturns, pains, continuous problems being thrown at you. And it is actually about how quickly you can recover and learn. So the founders who survive that, who don't take rejection personally. So, self-awareness is very important. Adaptability is very important. Financial discipline is the most important. I remember one of my VCs was telling me Africa is such a huge market.
Yeah.
And, it is huge, full of minerals and full of, people. The upper class is really rich. But, the Africans, they had totally lack financial discipline. So he was telling me that, it's so difficult to build a company in Africa because of this factor.
Very interesting.
Indians are more endowed with family knowledge, with common sense thinking about finance. So I guess that is a plus here. And emotional stability is most important.
Absolutely.
uh, Being a founder is very lonely. You can't really open up with your colleagues. You can't really have parties with a lot of even clients, customers, even with the investors. You can't be like totally friendly. So being a founder is a lonely job. So emotional stability, and lastly is alignment with purpose, because end of the day, if you are aligned with the purpose, then you will keep on enduring all of that.
Very interesting. Tell me, my next question is that what does good mentorship look like in the startup world?
Well, mentorship is about asking the right questions. So if you look at the Bhagavad Gita, Krishna understood that the space from which Arjuna was talking was more of an emotional space, and he was not looking at that, he has to defend the dharma, which has been breached by the opposite party. And they tried all their best to rectify it. So all that they could do for peace was over. So he said, brother, you have to fight. So, and he showed him the purpose of life and how it aligns with actually putting up a fight in this
Right,
situation.
right.
So, it is about asking the right questions. It is about trust, because the founder should feel secure telling his deepest problems with you as a mentor, so that you don't judge him like that. And accountability, mentoring isn't hand holding, it is holding people to their word, that you should what you meant, what you say you should mean. And it is about relevance, the mentors should know the latest technology, what is happening in the market, how suppose, for example, how AI is making the CRM system so good that instead of putting a huge team on that, he can just adopt a new platform and make it easy. So the mentor also has to be updated.
Well said.
And
Absolutely.
network access is most important. They need business, they need investors, they need management know-how, and they need funding. So they need all these things. So if you are able to get him some business, I remember one of the Dubai-based VC telling me that he knew a person on the board of director of a large company in India. So he told him, buddy, you know me since 30 years. This is a startup, so you give some business to him. So he said, listen, my job will be at stake if this startup doesn't deliver. So are you willing to give an underwriting in return that you will make up for the loss if something happens? So this guy actually did that.
Very
He
nice.
actually gave underwriting, and as to he covered the startup. So something like that,
Yeah,
network access. And
absolutely. Can you share an example of a founder you mentored who achieved remarkable growth?
well, there was a fintech founder. He used to work in a fintech company, so he understood that how this platform is making things very easier, given that the base Aadhaar UPI is already there, superbly built by the government. So he understood that the next phase of fintech would be fintech lending
Right.
using the platform. So, but he belonged to a very simple Pahadi kind of background. So uh, he didn't have too much money to take the entire risk. But he was very entrepreneurial. Like I remember, he tied up with NBFCs on his own. Like even before funding, he had tied up with NBFCs for using their balance sheet.
Right,
So he was
right.
very entrepreneurial, but he lacked confidence because he belonged to a very low background. So I mentored him in 2018 before COVID, and we got him funding and gave him confidence that since he understands the entire business and he's so entrepreneurial, so he should not be try to be perfect in front of the investor. He has to say things as they are, including the achievements.
Yeah, yeah.
So this is what he did, and we refined his pitch, the business plan. We refined his financial model, the projections, the valuation, and we also told him that he has to be very clear who his customer is. So the market segmentation. And that part once cleared, he was able to raise money, and he was very humble, very disciplined. He came to the call prepared. He tracked every KPI. He took feedback without ego, and that helped a lot.
Very interesting. Tushar, can you share a deal? I don't want any names, of course, or a startup that didn't go as expected, and what were your learnings from something like this?
Uh, well, on paper, everything looks so right. I mean,
Correct.
I remember there was an edtech. Somehow after COVID, edtech became a graveyard, and people just stopped. Like students don't enjoy
Hmm.
online classes. They
Hmm.
don't feel like studying online
Yeah.
unless you are like doing a job in the US, but you want to prepare through an Indian coaching company online, and you are motivated,
Hmm.
then you will do it. But if you tell my student in school to take online classes, he'll probably sleep through it.
Hmm.
So EdTech company was there and great ideas, strong founders, solid early traction. But within 2 years, the model collapsed.
Hmm.
And the reason wasn't competition. The reason wasn't lack of funding. It was basically the disability of the founder to adapt to the changing market.
Hmm.
And the market had become a hybrid. So, uh, purely online was not selling.
Hmm.
And that is what taught me two priceless lessons. First is that founders' market mindset matters more than the business plan. And secondly, that timing and is everything. Timing
Hmm.
is everything.
Amazing.
India Mart came in 2007 or 6.
Hmm.
It has been around since ages,
Yeah.
and they only hit the curve, the growth curve, after others started hitting it.
Hmm.
So, timing is very important.
Absolutely. I have time for two more questions for you, Tushar. Um, what trends are you seeing in investor behavior after COVID?
Well, before COVID, there was a FOMO, and founders were chasing valuations, even if the fundamentals were not clear.
Hmm.
And now the focus has shifted towards sustainability, profitability, governance, because
Hmm.
somehow Indian founders also have a name in the market, which is
Yeah.
not really positive,
Hmm.
of taking out money. And I remember one fund guy was telling me, I said that my startup has sent all the compliance in time. He
Hmm.
said, Tushar, you are talking about sending compliance in time. I am counting the Mercedes of the other founders who they bought within the first month of investment.
Hmm. Hmm.
So these kind of things are there. So
Yeah.
first big trend is the flight to quality.
Hmm.
um, Diligence cycles have become longer. VCs are now observing. Even the Shark Tank, they say we will invest, but
Hmm.
even if you look back, for the next 6 months they are doing a diligence.
Hmm.
So the cycles have become longer.
Absolutely.
And there is interest in new sectors. Yes, there is interest because everybody feels that AI layer will improve the efficiency of many sectors.
Correct.
So that interest is there. Global diversification is there, but it is capped by regulatory hurdles. SEBI guidelines and
Hmm. Hmm.
RBI guidelines and those kind
Hmm.
of stuff. And the last is, of course, data-driven decision making. So with Chat GPT and Grok and Gemini 3 especially,
Hmm. Hmm.
and this one Perplexity. So nowadays you have all the data. I remember one this friend of mine who's a CFO with an American oil company. He was
Hmm.
telling me that one of the angel networks had offered him a company for investing 25 lakhs, small amount of angel money.
Hmm.
So he asked my view about it. So I just gave a very smart prompt to Perplexity. I got a very beautiful analysis driven report. I studied it, and then I gave him my advice. So these are the trends. AI is
Amazing.
making it things simpler, but it's making it more democratic as well.
Correct. Correct. And my last question for you, Tushar. If you could give one piece of advice to every young entrepreneur or founder listening to us, and thousands of people do listen to our conversations, what would the advice be?
Well, I'll say that with reels and shorts and so many screens, our brain is running very fast because it is used to getting data very fast. So we are expecting speed in everything. We are expecting everything to be as fast as a reel or a short.
Yeah.
But life doesn't happen that way.
Correct.
So you have to play the long game and don't chase trends, chase the truth. The world will not reward speed, they reward endurance.
Correct.
So focus on building real value. Stop chasing problems which are good for your ego and not good for the market.
Correct.
So solve a genuine problem. There are many, many genuine problems all around you. We are full of problems, and even if the problem is unglamorous, always remember that value in life is built with the most boring things.
Absolutely right.
So money and value gets built with boring things. So you have to chase non-glamorous, unglamorous kind of things. Build your financial literacy. That is the real gold standard. And always remember, founders don't burn out from hard work. They burn out from lack of clarity because that gives them stress and anxiety.
Correct.
And the last is that, of course, again, I'm saying it again, that keep your character stronger than your ambition. I remember ThyroCare's founder saying that people who are successful make their wives into their secretary, and people who are not successful make their secretary their wife. So, I mean, in a way of saying that character is most important.
Yeah, I
So,
agree. I agree. And on that note, I just want to say, Tushar, what a fascinating conversation this has been. You clearly know your subject in tremendous amount of depth. Thank you for talking to me about your journey, about so many different aspects of investing, which a lot of founders and startup entrepreneurs will take back when they hear your conversation with me. Thank you for speaking to me, and good luck.
Have a good day. Thank you.
Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the Brand Called You.